3, 2, 1.
Check it out.
All right. So if everyone wants to just click on to watch my screen, because I see only 5 people are so far. And I'll go ahead and get started while people click that. You just need to click on my name and click watch stream. All right, so supply and demand. What is supply and demand? It's very similar to support and resistance, but things are zones. So supply and demand is a way of trading that uses areas of imbalances to enter and exit trades. Basically, what you're trying to do is you're trying to enter, if you're trying to be short, you're trying to enter in supply. Your stop would be above that supply zone, and then you're targeting the next demand zone. And if you're going long, the opposite, obviously. The concept all stems from there are leftover orders that were not canceled by big money. So according to what people will say, who knows like the real story, but supply and demand is, hey, big institution wanted to buy $1 million at Apple at $100. Well, maybe they didn't get a full fill. So they only got like a partial fill. When the price comes back down to that $100, well, their order is going to fill and the price is going to go back up, is kind of what it's talking about. And so, how to play a zone, I kind of just said that. So, in a perfect world, your stop is going to be above the zone or below it if you're playing supply or demand, depending which one you're doing. Now, that's not always going to work because if you draw something on like a daily or weekly time frame, if you're not used to that risk of capital, that zone could be $100, $200, $300 on one trade. And that might be too large for your account. Like if you only have a $1,000 account, that makes no sense for risk management. So you might have to factor in some other risk managements like strategies. But the idea is if price enters the zone, you have other confluences there to enter a trade. You will end up, going long, going short, whatever in that zone, and then targeting the next zone. But so, like I said, the flip side is trying to target those next zones. In a perfect world, if you are trading strictly by supply and demand, you shouldn't be messing around in between the zones. That's where there's a lot of chop. Usually there's not clear direction. So don't really look at that. The one thing I will say is a lot of times what I like to do is I will find like some setups in the middle using other things or maybe a smaller time frame zone that formed intraday. And then thinking of these larger time frame zones like the 1, 2, 3, 4 hour like time frames, those zones as magnets. Because at the end of the day, price is going to want to move back up or down. Now, another concept of supply and demand is balance and imbalance. So imbalance, just think of consolidation. Price is just, in theory, the buyers and sellers are in agreement of price. Price does not want to move higher. It does not want to move lower. So we're just kind of sitting in one little spot. Now, the imbalance that happens is when you get that large move. And that is how we know a zone probably formed. Like I guarantee you on a different time frame, would classify as a zone if in the way that Carmine defines it. All of this that I will be explaining is based off of similar to what Carmine teaches from a lot of his videos. And he's who I've learned most of my stuff from watching his YouTube videos, and I actually paid for his course. So some of the patterns that you will see with supply and demand is a drop base drop. So what you might have is you're going to have some sort of sell-off. You're going to have a basing period and then another drop. Now, obviously, there's also the reverse, rally base rally. So you rally up. You ever seen how like price will just rally up? You'll have a bunch of people taking profits, but then we kind of like consolidate for a few minutes or however long, and then we get another strong push up. That would be a rally base rally. And then you have a drop base rally. So that would be your classic reversal. And then you just have more rally base rally. I think I'm missing one. Yeah, I'm actually missing one that I somehow missed when I was doing this. The only other one would be the opposite of a drop-based rally, would be a rally base and then a drop. Now, how do we identify a zone? You look to the right or to the left of the chart. I wrote right. Ignore that part. You look to the left of the chart. Look at old candlesticks. What you're trying to find is a basing candle. A basing candle, if you are looking for a demand zone, is going to be specifically a red candle and then a strong move after. So in this case, I only took a picture of these three candles. We had this red candle right here, which is your base. So I would start the top of the zone as the opening price of this red candle, all the way down to the wick. If this had any wick that was above where the open price of that candle was, I usually don't mark that. There is people who will, but that is up to you. And then, so the next thing you would do is you don't want to chase this move after this forms, right? You want to wait for price to come back down and test this zone to see if you want to go long or not. So here's going to be my first example. If we're just looking at kind of a blank chart, the only thing on here is some EMAs and VWAP. Do you guys see any zones? All right, so now I was specifically looking for a demand zone here. So here I marked out this zone right here. We have a demand zone was formed. You actually see there's a rally, a base, and then a rally. You can also find probably a few other zones, but I just thought this was a good one since it also shows the re-entry of the zone and it continued going up. And now what about a supply zone? There's a few obvious ones. There's one right here. That'll be right here. We can see we had a large drop. We also had one over here where we had a drop, and then we weren't quite there, but we had a drop, and then we tested again and had a bit of a drop here. Now, I know one question might be, well, we ripped right through this one. So that's what my next slide is about. As you can see, the lower zone was completely ripped through. A zone will not work 100% of the time. You want to keep factors in mind. Think of FOMC, news, any sort of catalyst that's going to cause a massive influx of volume and just everything into your normal trading. You know, how often do you take a trade? There's some sort of news and it completely flops you or moons you. And there's nothing you could have done about it besides knowing when Queen basically posts about it. And so, like, at the end of the day, the zones aren't going to be perfect either. So I like to sometimes look as if you go by, especially like what Carmine will say is, if price goes fully through the zone, that zone is no longer there. And in theory, it makes sense because the theory is that big institutionals or big money is leaving their orders open. Technically, that means all their orders have been filled at that area. But once again, end of the day, it's not perfect. We're just drawing lines and boxes on charts, you know. So to me, this is kind of like a margin of error. So take that what you will. So I would rather see something like this big green candle going through the zone to know this is completely gone. Now, when do you actually get rid of a zone? Supply and demand zones do not flip once they're passed, like you would think with support and resistance. Now, you might have a key area, like I know a couple weeks ago we kept trading in like the same, if you're looking at ES, from 3,800 to 3,900. So you almost always knew there's something that's going to happen at 3,900, something that's going to happen at 3,800. You know, those two areas are important. At the end of the day, or end of the week, this past week, we had really kind of support off the top of that same area that we broke above of 3,900. So the way I like to think of this all in my brain is support and resistance is like looking at it like a 2D image. To me, that's just what kind of makes sense because at the end of the day, I don't understand how if I say price is going to bounce at $100 or whatever. That does not make sense to me. You're not going to see price bounce exactly at $100 all of the time. You might see 99 and a half. You might see 101. I like to think of everything as like some sort of zone, even if it's not necessarily a supply and demand zone. Like start looking at anything you're trading as more of like a range or some sort of zone rather than seeing it as this is just support, this is just resistance. At the end of the day, it's around this area. It's around that area is the way I look at it. So once again, when to invalidate a zone. A zone is invalidated once price has moved completely through the zone. However, like I mentioned before, just because price moves through the zone, do not think that zone is invalid completely, as we may have some late participants and price will still reject. Like I said, margin of error. But once we see like a strong move through that zone and it doesn't seem like we're rejecting, just delete it off your chart. Forget it was ever there. Now, this is going to be one of the last things I actually talk about that I've kind of flown through this, is key zones. Key zones are probably the most important part. And these are the zones, especially if you're looking back, because big thing this past year was we were in a bear market. We haven't really been in a real bear market in a long time. And one of your biggest issues was you had, if you're trading off of supply and demand, try finding those demand zones that were from years ago. Some of them are still valid. And that's the crazy thing to think. Even if these zones are really old, they're still valid. So the ones you want to pay the most attention to is where the ones where the rally or drop is extremely aggressive or violent. Was that from news? Was there some sort of catalyst that really got price moving quickly? Were we near a higher low? Was that maybe a previous day high? Was that a previous day low? Was that an all-time high? Was that an all-time low? Was that like a yearly low? You got to keep all these things in mind. Was it one where the market was downtrending or uptrending? Maybe we have been seeing like a real big sell-off all intraday, and then we got a massive move up for whatever reason. That's another important zone, because most likely when you come back to that zone, there's going to be people who want to try to get some of that action again. And now the last thing, which this is something that might contradict sometimes what you think about with support and resistance. A lot of times you think as it taps that support and resistance multiple times, something's going to get weaker. In this case, it can mean that, but you want to pay attention to those zones that have been tested time over time and time again. If they've been tested multiple times, yes, they might be weaker, but it might also show there's a large amount of orders waiting there to send that price back down or send it back up, whatever it's doing. So pay attention to those zones. I know like one I've been paying attention to a lot, I think was like the 3940-ish area, I think is what it was this past week on ES. I don't remember, that might not be the right numbers, but I know there was like one specific area where we just kept like rejecting off of it. Or no, it was the area that we sold off of earlier this week. All right, so some tips I have. This is my personal preference. You guys might find something else you like. If for day trades, I like to have 1 to 4 hour zones. My problem is I don't like to trade with daily zones or weekly zones as much, because a lot of time those zones are massive. You might have 100-point zone. And if we go back to your risk tolerance and talking about that, you're going to be risking a lot of money on that. That 100-point zone will send your contract to zero. Maybe it will work out a little bit better on if you're swing trading and going for, some sort of leap or something that's going to be a few weeks, something like that. Intraday, I've been liking using like between 5 to 30-minute zones, but don't overdo it, because especially when you start looking at some of these lower time frames, you can kind of skew things to make it look how you want to make it look. Like it will look like it's going to be a supply zone, but also understand in some ways the lower time frames you go with these zones, the less reliable they should be. Because at the end of the day, you only had like maybe maybe your volume was only like 1,000 on that one candle. At the end of the day, that's nothing, depending on the stock you're playing. So find what works for you. Like I said, I like to start with just really zones from the 1 to 4 hour on my chart going into the day, and then intraday, I will add other zones that usually get deleted by the end of the day. You want to understand also the context of the zone. Was there numbers behind it, basically? Was there news? Was there FOMC? Was there some news that came out saying that, a company failed to do whatever? Or seems like Tesla has news every other day. Did we get a sell-off because of that? Because those zones most likely are going to have a lot of trapped participants. Now, some of the best zones you're going to see is going to be zones that have a reaction almost immediately, almost like too quick for you to enter sometimes. So sometimes it's hard to find that confluence to actually enter the trade before you hit a zone. But that doesn't mean just enter a zone as soon as, or enter like a trade as soon as it enters the zone. You're going to likely get chopped up at some point if you keep trying that. You also want to kind of understand the context. Like, if we've been selling off all day, there's no reason to go long, even if we get into a demand zone. That's just asking for profits to get wrecked. You're catching a falling knife.
Hey Trevor, just real quick,
Mm-hmm.
the text chat for the voice channel. I think they were asking some questions.
Oh, okay. Let me go look. I see lots of memes.
That's Brandon.
I'm not surprised. Yeah, Stonk Kitty Stonks posted the person I was talking about with Carmine. Which EMAs would I suggest? I personally only like using the 9, 21, and 200 EMAs. Mostly because I feel like 9's good for the trend. 21, I honestly don't really have a good reason of why I like it. I've just always heard people using 21. And 200 always seems to have some sort of rejection or some sort of movement off of here. Do you wait for the retests in zone entries? So it really comes, so waiting on the retest, I prefer to wait because your better risk to reward is going to be in those zones of entering a trade. Now, like, my favorite kind of trades are going to be when you have some sort of candlestick pattern going into those zones, and then it's a pretty much a double confirmation. Like, if you have like some sort of wedge pattern into a demand zone or into a supply zone, that just gives you one more reason to be going long or short. Like, why wouldn't you want to take that trade? That trade just gives you so many more options of understanding your risk, a great setup. Like, I know I think it was last Friday, I saw a perfect one on Amazon. It was a rising wedge right into a supply zone that had been respected before, and it was a perfect trade.
And what did we talk about last week when you see multiple signs in different ways that are pointing to the same, the direction the stock might go? Confluence.
Yeah,
So
so you'll hear some people will call it confluence, some people call it, what is it, like confirmations, whatever. At the end of the day, they're all kind of talking about the same thing. Some people try to give it a different definition. Personally, I don't care about that. Just whatever you want to call it. Basically, just reasons to be in the trade or like the trade that you are in. Because at the end of the day, it's going to make you more confident. The more things that you have in your favor, the more likely you're going to want to stay in that trade. You're going to be comfortable if it goes a little red. You're going to be comfortable when you are finally green on that trade and not just taking profits when it's only at 5%, and instead maybe holding out till at least 20, 25, 30, maybe 50, whatever it goes to, right? I already mentioned the thing about the weekly and daily zones. Have other profit targets, because sometimes those zones are too far away. Like, if you're trading like ES or off of ES and trading SPY, maybe the next closest zone isn't for 50 points. 50 points is kind of a lot when you're starting to talk ES versus SPY. I personally wouldn't be holding out for all 50 points of those. Because also, if you get a 50-point move, that's going to be an amazing trade. ES is the futures of S&P 500. So you have the futures, then you have the ETF, which is what SPY is, and then you have, I think SPX is something else with the S&P 500. I don't really know. I just trade tickers. So sometimes you need to have other profit targets, like maybe you have a 200 EMA there. Maybe you have another just like a random level that wasn't necessarily a zone, because I still use levels of all sorts. Doesn't mean that's the only thing, but my preference is supply and demand comes first. Then I have like my levels where, you've seen price kind of react around, but there's not necessarily a zone. And then you have like your EMAs. Like I really like the 200 EMA as one way to use as a profit target. You can use all sorts of things for whatever your profit targets are, but it has to make sense. Like don't sit there and, oh, I'm going to risk this whole zone, and maybe that whole zone is worth $50, but my first profit target is $10. Makes no sense. Your risk reward is you're asking to lose. So I kind of mentioned this a little bit. I start my zones from the opening of the candle to the wick. I can also show some more examples of actually like kind of going through some, because I haven't done like any charting this weekend yet, of like maybe trying to find some zones on a couple tickers if you guys would like after. And then I mentioned how think of everything as zones. Don't just think of things as just a one fits all level. Any questions or anything you guys want me to go back on? Yeah, I'll most likely go through and probably at least update a couple charts. Frederick, it kind of depends on the situation of the day. Like, it's hard to say yes or no to that question, because you want to catch the move when it's coming out of the zone, right? Because that's going to give you your best risk to reward. But if we've been selling off like all day, are you going to really try to catch that falling knife? Is there any indications of a reversal happening? If there's indications of a reversal happening, yes, I will take that trade every day. Now, if it's not, if we've been selling off all day, there's no reason, indication. So when I'm charting or when I'm trading intraday, I like to have ES open. I like to have NQ open. So basically having SPY and QQQ open to understand what's going on with those. And then I have a couple other charts. Usually I have Amazon, Apple, Microsoft, and then the last chart's usually a floater. If Apple and Microsoft are looking really weak, I'm not going to enter anything long, because those are your two largest things in the S&P 500. It would make no sense to try to counter trend those if I'm trading SPY. Indications I would use: EMAs, looking at the market leading equities. Was there a pattern? There's a lot of ways. I had a feeling someone was going to ask about walking through a trade, and I was going to add something, but I'm honestly terrible at, by end of day, if one of my zones was worked through, I delete it. Because honestly, I think the best example would have been the Amazon trade I was talking about, that I took like not this past Friday, but the Friday before. It was like a really good setup. When maybe later this week, if I
Okay,
find it
obviously, with regards to
What was that? Hello? I don't know if someone just got cut off somehow.
It wasn't us. Maybe they accidentally unmuted themselves.
I guess so. Okay. I just heard something with regards, and I thought, oh, I thought they were asking.
Me
All right.
too. So you were
And
saying maybe later in the week?
yeah, so maybe later in the week I'll try to like look out for one of my trades and like try to at least like maybe like screenshot it or something to give some examples off of like playing supply and demand. Um, that would be the best thing I can do. And then you can always ask me like, tag me in one of your charts and ask like, hey, does this look like a valid supply zone? Does this look like a valid demand zone?
Yes, and you'll see Trevor's name actually shows black in the chat because he is one of our market specialists in the chat because he has a proven track record. He's the boss when it comes to supply and demand. For the ones that missed, he was in a previous paid Discord. He had his own channel. He's awesome at it. And we're super grateful that he's here, to help with questions with supply and demand. I definitely trust his teaching.
And if there's like something you guys want me to like go back to, I can go back into here. Queen did say I had to make a quiz, so I did do that. I don't know if there's something that you guys want like a little bit extra of an explanation on. So not really, honestly. Since I mostly trade SPY, I like to look at the things that will indicate what SPY's doing. But if you were to be trading something like oil or banks, it wouldn't be a bad thing to be looking at like whatever the big name tickers are for those. I think they're like for futures wise, I think CL is one. I think for crude oil, if I'm not mistaken. See, I don't even know because I stick to like my same couple things I normally trade.
And
And I
that's
really
emphasized a lot too. Find you one or two tickers that you like and get to know them and get to know their personality and stick with them. They can be your bread and butter. I mean, you have someone here very experienced telling you that as well.
there's the question just for Queen. Is it better to mark up supply and demand on ES versus SPY? All right, so at the end of the day, they move pretty much the same. I personally like to mark things up on ES in general. If I am trading SPY, SPX, or if I was trading futures, because sometimes I paper trade futures, I think marking up on ES is better. But my reasoning is because futures is traded 24 hours, 24 hours a day when it's open from 6 p.m. EST on Sunday until Friday at 6 p.m. It is traded for 24 hours. So you will have those price movements overnight. And those are what the futures are trading. So I like to mark those zones because in terms of ES, it is relevant. In terms of SPY, it is relevant. That is also why, if I don't know if everyone saw it when Queen first invited me to this server, I don't like talking about SPY gaps or SPX gaps because 9 times out of 10, if you look at ES, it doesn't exist. Like the only ones that usually exist is from when ES closes on Friday and opens up on Sunday. So that's why I like ES better personally. One of the things I know Carmine will talk about if you watch some of his videos is he says if you're charting supply and demand on any sort of equity, so like Apple, Tesla, whatever, it not to mark them with after hours on because there's a lot of low liquidity in things. That's one thing I'm not necessarily sure I agree with because I think there's a lot of importance with pre-market levels. So if you find pre-market levels important, keep those after hours on. But if you don't and you have a tendency not to really to look at them, then it might be best to mark your zones without it. And that's just on like any sort of like equities, your Apples, your Teslas kind of thing. No, ES and SPY pretty much move identical. It's just a matter of what, 1 point of ES is equal to SPY. It's very rare that they look any different. Do you look at ES and NQ if they behave the same? Confidence? Yes. That is important. So ES and NQ, most of the time, should be moving roughly the same. A lot of the large market leading equities in ES versus NQ are the same. Apple and Microsoft are still two of your biggest ones in both of those. So if NQ is looking weak and maybe SPY isn't or ES isn't showing it, that might be an indication that something isn't looking right here. Are we going to reverse in ES or is NQ about to reverse? So you kind of want to look at both and see like if these two are moving in different directions, there's probably something about to happen. Like that's also just like the importance for looking at why like if you are even just trading SPY, looking at some of the market leading equities like Apple and Microsoft. The one that's kind of hard is Tesla. Tesla lately seems to just be disconnected from everything. So Tesla's kind of a hard one. It likes to go and do its own thing. Like I remember there was a few days, like I think a week or two ago, where it was like almost every day it would be like market was up, Tesla was down. Or market was down, Tesla was up. Yes, technically all of them. But it's just good to look at the ones with the biggest percentage because if those biggest percentage ones are moving, those biggest percentage ones are going to cause a movement in ES.
Yep, and I believe Apple holds the biggest percentage in SPX SPY. It's like 6%.
Yep.
And then Amazon. So
Yep, that's specifically why I like looking at Apple and Microsoft because combined they're over 10%.
Yep. So there may be 506 companies, I believe, in there, but the ones that have the biggest percentage of it, if they're moving in a certain way, they're definitely going to have the biggest effect on it.
Yeah, I used our amazing bot to show the holdings in the chat now. If people want to watch the biggest holdings.
Yeah. Yeah, and see, so that's why I think it's really important to really, a lot of times, watch what Apple and Microsoft are doing, even if you're not trading SPY. Because at the end of the day, if the market is tanking, there's probably not a lot of good long opportunities. It's probably mostly short opportunities.
Yeah, because if you think about it, if Apple and MSFT basically control SPY, if they start tanking, SPY starts tanking, SPX starts tanking. And what do we look at the market as? We basically see the market is SPY and SPX, right? So if it starts tanking and everyone else and any other stocks see that, they're like, oh shit, something's going wrong. The market's dying. Holy crap, let me get all the other stuff. So it's definitely something, to keep an eye on. I agree.
And then another thing that it kind of goes with that, if you're watching multiple things and understanding, oh, hey, I see SPY is selling off. Is there something right now that's lagging a little bit behind? Like personally, like I've caught that with Amazon a lot lately, is it seems like Amazon sometimes, like you'll have Apple and Microsoft already selling off. You'll have QQQ starting to sell off. You'll have SPY starting to sell off. But Amazon's still kind of hanging in there. And then sometimes if you can find a nice setup on that, you're going to have a better risk to reward because it's going to fall too. Like at the end of the day, it's probably going to fall unless it's for some reason being an outlier. But that's one of the reasons I also really like Amazon because it also trades like pretty cheap contracts. And so you could get for a $300 to $400 position, you could get 3 to 4 contracts probably. And now you can risk, have your risk management better with that. So, I mean, QQQ is, some people have preferences. Some people like QQQ better. So, I mean, at the end of the day, find what you like better. I personally like the way the SPY moves, and I like the way of looking at ES better than I like at NQ. The other thing is, I don't know if you ever looked like, if you try to play the equivalent of SPX on the queues with NDX, those contracts are ridiculous, and you almost are instantly down like $2,000. So I'm good with that. I trade QQQ once in a while, but actually QQQ has been my biggest losses this year, ironically. So I'm probably staying away from QQQ right now.
I'd say, SPY, QQQ, and IWM are the most, popular. But people tend to either veer mostly towards SPY or IWM. They might go the IWM route because IWM, moves a little bit slower than SPY, and the contracts are cheaper. And then some veer towards that, crazy, chaotic, my love of my life, SPY. She has more volatility, moves faster. You know, the contracts are, a little bit more expensive, but that would basically be your two differences on why, some people choose the IWM and some choose the SPY.
Yeah, at the end of the day, it comes down to risk management and what makes sense for you. So one of the things when there's been times of me struggling, I'll sometimes go to start playing Apple a lot because Apple kind of almost feels like a smaller SPY, and a lot of times you get the same movements out of the two. So that's one thing I'll sometimes go and do is trade Apple a lot based off of kind of what SPY's doing. And that will help build back my confidence up or see hey, what's working here, what's not. And because it doesn't move as crazy usually. Now, can it? Yes, 100% it can. But you're not going to have those crazy contracts and everything. And at the end of the day, also with trading supply and demand, if you're trading off these zones, especially you're trading off a one, literally anything bigger than 1 hour, get the fuck off of 0 days. That's all I can say.
Agreed.
Oh my dear God, please, yes. I wholeheartedly believe with every fiber of my being that they realize retail is catching on and starting to be more successful, and they changed every day to a 0 day to screw us.
It's to chop out more beginners because they're like, oh, this contract costs less than $1 a contract.
Mm-hmm.
Well, yeah, that's great. Now we chop around the market for five minutes and you're down 20%.
Yep, they've added a lot more sideways movement as well, and that's hoping those people fall for those 0 days, and they do a lot of sideways chop, which is going to eat away at your premium and just kill it all.
Just as in a risk management talk, I like to trade 0 days every once in a while. But if you are new in building an account, get away from them. At least get 2 days extra. Yeah, you might need to go a tiny bit more out of the money. You might need to, only have one contract instead of having 2 or 3. Just if you trade them, you need to have a tight stop. Otherwise, you're going to clap your account faster than anything. And the worst part is, you'll clap your account and you were right on your position, but you were screwed by theta.
Exactly. You have to be precise with 0 days, and it has to be quick movement, because once that slow sideways comes in, you're screwed.
Yeah, and remember that there are a lot of ETFs with a lot of trading volume, not just the ones, like you said, we mainly play SPY and QQQ and IVM. But for example, if you have a good track record with, let's say, banking stocks, you can play XLF, for example, that is the financial sector ETF.
Exactly. All right. If there's not any more questions, we'll go into the little quiz that Queen made me do. And then we could also still answer more questions afterwards, and then I could probably go through a little bit of charts. We know, Brandon. All right. So the first question I have is, what is balance? And Coupon Baller already got it. I don't know how you normally do this quiz, Queen.
So you just call out to me who got the right answers, and I will take the points.
I just see coupon it, and I already said it.
Okay. And it's the first one who throws out the right answer in the text chat.
Okay. Yeah, it was coupon. I also kind of like sped through in like 15 minutes on the everything, and then just kind of went on random rants for 30 minutes. All right, so yeah, consolidation. You also think of it as the basing candle. That basing candle, you don't necessarily have to have it be a long period of time is the other way to look at the balance. All right. What makes a zone stronger? So a violent aggressive move, continuation of the move, multiple touches of a zone, or all of them. All right, yeah, 3 different people like said it at the same time. I don't know how to say that name. Salim Muya, rookie,
Yeah, something like
coupon.
that.
Yep, it's whoever got it out first. Who got it out first?
They kind of all came at the exact same time.
Okay, we'll give them equal. Who said it? What 3?
Salim Muya, I think,
Salim?
rookie, and coupon.
Okay. I'm loving it. Look at y'all go. Yay.
What is the best way to tell a zone may be getting invalidated? And there's a few different answers for this. So I think I put like a few different answers here because it's kind of an open-ended question. Because at the end of the day, there's a lot of different ways. So and this is more of talking about before the zone actually is invalidated. So you guys mentioned this is more of this is a little bit more of like, I don't want to call it critical thinking, but kind of critical thinking. A way that the zone is being invalidated. If price has gone all the way through, then the zone in theory is invalidated completely. But so I don't think maybe a lot of people will get kind of like the full answer here. So a few answers, and this is one actually that was in like the reading. Order absorption. So the more times it's been touched and the more times it's been kind of like consolidated through, you're going to end up having more. Oh, rip. I don't know how to fix that for you. There's a lot of answers here, but basically, if you have price consolidating in a zone, that zone's probably not going to work out well. It's probably going to break down. Order absorption is kind of the same thing as consolidation. Another good way to look at zones, and this is just something to kind of look in general, if you have a higher time frame zone, like let's say a 1 hour zone, you have like a 1 hour supply zone, right? But you're on the 5-minute intraday and you see zones forming, maybe on like the 5 or 15 or 30-minute, maybe something with a little bit more, starting to form like one of those patterns we were talking about, there's probably a good chance this zone is going to get invalidated. If you're not seeing selling signals inside that supply zone, you're going to have a chance of that zone getting invalidated completely. And you wouldn't want to end up taking a short if you're in that supply zone, if you're seeing these things happen. Because at the end of the day, that's a not as good trade. All right. A true or false question. Once price is through a demand zone, it is now a supply zone. So I believe Frederick is the first one who got that one.
Yeah.
Yay.
So, so price does not, a demand zone does not become a supply zone can it happen in theory? Yes, it could. But it would require basically a new zone being created on top of the old one. However, there is something else called order blocks. And if you start to look into order blocks, they are extremely similar to supply and demand. But order blocks can have this flip happen. But I would say if you are new to supply and demand, don't look at order blocks yet. I would say supply and demand, then order blocks if you choose to go that route, but you can stay with supply and demand. It's not this is like the higher level version. At the end of the day, both work. Now, this might be a personal preference question, but this is a question I thought would be good to throw in here. If price returns to one of these zones that I marked 1, so 1 being at, this is off of ES, 4,029 and 3965 for number 2, which would be the better short given no other context other than this chart you're looking at right now? So I would say 2. 2 would be the better zone. There's multiple touches.
Brandon got it first.
Wait. Actually, I wrote the wrong thing. It's supposed to be 1. I'm sorry.
Yes, yes,
Oh,
yes.
All right.
Crispy
So
got it.
here, all right. So here is my reasoning. You have multiple touches of this zone. We have not really broken through any of this zone. And then if you actually, this is something you couldn't see, but the market made a new trend when we hit this zone. This is with the zone that we sold off of earlier this week, where the morning we kept chopping in between, like, I think it was literally like kind of like 40-10-ish to this 40-30 area. And we were just chopping. And then we had that big sell off and we just sold off the rest of the day. I like it better because I would personally like this better because we've had multiple touches. Because, like I said, multiple touches in some aspects can be an indication of a better zone. So here you have nearly 4 touches just on this part of the screen. And then you have this really violent, aggressive sell-off. Now, the best part about the sell-off is it created a second zone here. Now, you say that. So that is one thing that Brandon said was price may not return to that zone. But if we're talking about the S&P 500, it's going to return there at some point. At the end of the day. Now, if you talk about some penny stock, well, yeah, the thing might get delisted or something. Oh, one thing I didn't mention actually during going through this. Now, I haven't tested it as much on like penny stocks and some of these smaller stocks. Most of my application has been on like market leading equities. So if you find it doesn't seem to work as well on like some penny stocks, that's good information. Maybe share it here. All right. So next question. If you are short on a position and you entered in a supply zone, where should your stop be according to the zone? So Crispy answered it first. Frederick, I think read it a little too
You're
fast.
throwing them out left and right. You're not even reading them yet. Oh my god, I love this.
So yes, so if you were in a supply zone, the supply zone is the top, would be like the top or the selling. So your position, if you're short and you entered in a supply zone, the stop in theory should be the top of the zone. However, you may have other reasonings for this. All right. What are the patterns associated with supply and demand? There's technically 4 answers here. No. Oh, come on! It was one of like the first things. Now these are all good answers of wanting to see those into zones. All right, TQ has like the first like closest thing, rally weight rally, but it'd be rally base rally, same thing. So I would say TQ gets definitely a point there. Rookie gets a point. Rally base drop, yep. And then there should be one more. So TQ got, yep, there we go. So Rookie and TQ both got 2.
Okie dokie.
So, yep, as we said before, so you'd have your drop, your base drop, your rally base rally, your drop base rally, and then the one I forgot for some reason, rally base drop. One thing I will say is these also kind of go well if you look at like a lot of like ABC, like with Elliott waves kind of stuff, the drop base rallies or the rally base drops. They're kind of honestly very similar. All right, so like I said before, I learned most of my stuff from watching Carmine on YouTube. I really think he's one of the best people, and it's a great. He talks a lot also about like a lot of the psychology stuff. The one thing I will say is if you watch his trade reviews, they get kind of repetitive, but watching some of his more informational videos is very good. His course, I think, is good, but I think truthfully, it's not worth. If you have the ability to get the information you need about supply and demand from other places, it might not be worth it to invest that money, in my opinion. Like when I found him, I was in a place where I didn't understand trading enough. I was constantly losing money. Didn't understand really what I was doing. I felt like technical analysis was like, how does this work? It didn't make sense when someone said, oh, at $100, price is going to bounce. I hated that. So I really found him to be extremely helpful. There's probably a million other people that are really good, but I would continue working on that as well. Like, just find someone you like that makes sense to you. And at the end of the day, there's a million ways to trade. And that is pretty much it, other than like if we have any questions.
Before we get to any more questions, real quick. So we had Miss Chupambala and Miss Ricky with 3 points, and then Crispy and TQ with 2 points. So it's a tie between Chupambala and Rookie for the quiz. Yay! Y'all will get the medal next to your name and your certificates coming out. And oh my god, I absolutely love it.
Frederick said he had 2 points too. Apparently.
Let's see. I only have it down for 1. But I trust you. Fred had 2 as well. But that still leaves Coupon Baller and Rookie as our winners. But oh my god, like he didn't even read the question yet, and y'all were like shooting out answers and stuff. Like I swear, like every week y'all are gonna freaking make me cry. This is amazing. I love to see this. I love to see that y'all are laughing and learning and having fun. I mean, this is how we build bonds together. This is how we grow together. This is how we learn together. I'm so proud of y'all. Did y'all have any more questions for Trevor?
Let's go away. I got the thing open. I'm going to switch my stream thingy to my charting so you guys can see that.
And yes, Trevor, you are absolutely amazing. Thank you for stepping up and teaching this class and offering to let them bug you more for some charting requests after. I love that. This is the essence of what we are about. a community coming together, learning together, growing together. This is it. This is us. This is what we're meant to be. And Trevor, you stepping up and wanting to teach and not just take a part, but an entire class. Like, wow, we are super grateful to you. I love this. Just thank you so much.
Yeah, no problem. Yeah, if anyone ever has questions, like you can always ask me if you want to ask about like valid zones. I'm gonna probably do a little charting now to update my charts because at the end of the day, I need my charts for next week too. But if you want to look at like a zoomed out, like I always joke with this because people think my charts are crazy, but there's like a million lines on here. It might look a little crazy looking, but this is all my zones.
Trevor, real quick, while you get your charts pulled up and they can ask more questions, Loki, do you want to talk for a couple minutes about the DD for Dummies? While Trevor gets his charts pulled up, and then whoever wants to hang around and look at charts with Trevor is more than welcome.
Okay, sure. First, like, wow, that was an amazing class, Trevor. I'm like blown away right now, and then looking at all these charts, I'm amazed. But yeah, so we're gonna have a DD for Dummies today in what 4 hours? 4 hours. 5 o'clock Pacific. What is it? Your time, Queen? 7?
7. Mm-hmm.
7? Okay, yeah. So we're gonna go over priming, which is pretty much kind of it's kind of like a mindset trick to kind of prime yourself to get ready for the day. And Queen is going to be on to go over, I guess, your morning checklist.
My trading rules.
Yes, because I think that is so important and an amazing way to start the day, and kind of go over what how you came up with that, the benefits of it, and the results you've seen. So I am excited.
So if y'all don't know, I know some of y'all know Stonk Vision, Apes for Change. Y'all have heard of, them and Loki. Loki and Stonk Vision do the DD for Dummies on Twitter every Sunday evening. They're also board members of Apes for Change. And if you don't know, my very first time teaching online ever, I was a guest teacher partnering with Loki and Stonk, teaching about predatory shorting. And so that was my very first time teaching online, like ever. I was a guest on their Twitter space call. And that was a huge, huge, huge pivotal point in my life. I had AMC, and then bam, they, heard me talk, and they asked me, to guest speak with them. And then I was like, man, I want to learn other stuff. And then so I started, learning about the day trading and everything. Like I want to cry right now. They were a huge, huge pivotal point in my life. I ended up quitting my job and making this full time, and they're on Twitter, and, we're all about supporting each other. We got our Twitter people, we got our Discord people and Reddit people, and we really just need to fill that gap and come together and learn together and grow together. So if you like the Twitter space calls, please join on this evening. If you know our Twitter and my Twitter, we've posted it. Come listen in and see. Take every opportunity to learn. Bring us all together, so we can be successful. So absolutely.
Thank you for that. Yes, it's amazing to learn from each other, because when you came on the first time, it was powerful, and we need teachers. So this was amazing, Trevor. Like, yeah, we all need to teach each other, or just learn, I guess, share what we've learned. So awesome. Thank you.
Okay, if anybody, thank you, Trevor, for being willing to stick around. I'm going to stick around and watch too. If anybody wants to talk with Trevor about his charts, see anything. If people have to get off, I understand we're at that closing time. But if you want to stick around and bug Trevor, I'm gonna stick around and watch y'all bug him. And it was an amazing class. Thank you again, Trevor. Like, I freaking love you. You are the best. Thank you, Loki, for doing what you do. Thank you to all of y'all for coming, because this chat is y'all's. It is for you, about you. It is y'all's. And then again, congratulations to Coupon and Rookie. Whoop whoop winners. So now y'all can bug Trevor.